Hey everyone, and welcome back to the Deep Dive. Today we're going to be looking into something that's been kind of causing a stir in the financial world,
Mm-hmm.
and it's actually pretty relevant, especially if you're prepping for the UPSC exams.
Right.
It even popped up in a recent Indian Express article, and that is pre-IPO trading,
Yes.
specifically in India.
So what's really interesting here is that the period between, when an IPO closes and when those shares are actually listed on the exchange,
Right.
it's kind of been like a regulatory gray area.
Oh, okay. So like a gray market.
Exactly.
Not totally illegal, but not exactly, clean either.
Precisely.
Okay.
Imagine like this bustling marketplace, but instead of, your typical vegetables or clothes, they're trading shares of companies
Okay.
that haven't even hit the stock exchange yet.
Interesting.
It's all based on these predictions and like hoping to snag a quick profit once that stock officially lists.
So it's kind of like getting in on the ground floor, but with like added risk because
Yeah.
it's not regulated?
Think of it like this. A company announces its IPO with a price band of, let's say, like RS 9100 per share.
Okay.
Now, in the gray market, people who think that stock is going to do really well might be willing to pay like a premium.
Uh-huh.
Let's say like RS 120 a share,
Wow.
even before it's officially listed.
Okay.
They're betting that price is going to jump even higher once it hits the stock exchange.
But that sounds super risky.
It is.
What happens if the stock doesn't like perform as well as people were expecting?
Well, that's the gamble, right? If that stock lists at a price lower than what you paid in the gray market,
Yeah.
you're going to be looking at a loss.
Oh.
And because it's unregulated, there's also no guarantee of like a smooth transaction.
Right.
Or that you won't run into, unscrupulous brokers.
So high reward, high risk.
Definitely.
I can see why SEBI, which is India's market regulator, wants to kind of like step in and bring some order to all of this.
Absolutely.
And they've come up with this thing called the Win-Listed platform, right?
That's right.
I've heard about this.
So SEBI recognized that there was this need to protect investors and just ensure a level playing field. And this new platform is designed to like bridge this gap
Okay.
between the allotment of shares after an IPO closes, which is typically like one day after T+1,
Right.
and then the official listing on the stock exchange,
Right.
which usually takes 3 days, T+3.
Okay, so when listed, essentially creates like a regulated space to buy and sell shares during those like 2 days.
Exactly. It brings those transactions under the watchful eye of SEBI,
Right.
offering like a much safer and more transparent alternative.
Then the gray market.
Yes.
That makes a lot of sense.
Yeah.
And, for our UPSC aspirants out there, this is like a prime example of how SEBI works to regulate the market and protect investors.
Right.
And that's got to be a hot topic in those exams, especially for the mains.
Absolutely. It aligns perfectly with SEBI's mandate to safeguard investor interests
Right.
and ensure the smooth functioning of the securities market.
Now, the article we mentioned from the India Express also used the term kerb trading. Is that the same thing as gray market trading?
Not exactly.
Okay.
Think of kerb trading as like the broader category.
Okay.
It refers to any kind of like unofficial trading that happens outside of the regular stock exchange hours, almost like trading on the street.
Gotcha.
Hence the name kerb.
Right.
Okay.
So gray market trading where those pre-IPO shares are being exchanged, that would fall under that umbrella.
Precisely, gray market trading is like a specific type of kerb trading that's focused solely on those pre-IPO shares.
Got it.
Yeah.
That's helpful.
Yeah.
Now, to zoom out a bit, can you just remind us about the key functions of SEBI?
Sure.
Because this is all like crucial stuff for those tackling the UPSC exams.
Of course. So SEBI's role is basically to ensure that the securities market operates fairly and transparently.
Right.
And it does this through several key functions.
Okay.
Starting with approving and regulating IPOs. They really scrutinize companies before they go public to ensure they meet certain standards and protect investors from potentially risky ventures.
So SEBI acts like a gatekeeper, making sure only the companies that meet like the criteria can enter the market.
Exactly.
Okay.
But their job doesn't end there.
Right.
SEBI also enforces rules and regulations for companies that are already listed on the stock exchange.
Oh, okay.
This includes requiring them to be transparent with their financial information, maintain good corporate governance, and prevent things like insider trading.
So even after a company goes public, SEBI's still keeping a close eye on them to make sure they're playing by the rules and treating investors fairly.
Right. All of this is designed to create a market where investors can participate with confidence,
Right.
knowing that there's a system in place to protect their interests.
This is gold
Yeah.
for anyone prepping for the UPSC, especially, those essay questions on financial regulation and economic development.
Right.
So to bring it back to our main topic, how do you think this new when-listed platform will affect the gray market? Could it, wipe it out completely?
That's a great question.
Yeah?
And it's something that we'll explore further as we kind of continue our deep dive.
Okay.
The gray market has been around for a while.
Right.
And it's driven by, various factors, including that desire for quick profits and just the thrill of speculation.
So you're saying that even with a regulated platform, some investors might still be drawn to the allure of the gray market.
Precisely.
I see.
And that actually raises another important question.
Okay.
What other measures can SEBI take to safeguard investors and ensure a fair and transparent pre-IPO market?
Yeah, that's a good question.
Right.
Okay, so we'll delve deeper into that after a short break, so don't go anywhere. We'll be right back with more insights on pre-IPO trading in India.
So we were just discussing how SEBI's when-listed platform is aiming to bring more transparency and regulation to pre-IPO trading.
But you raised a really interesting point. Even with this new platform, the gray market might not just disappear entirely.
Yeah.
Why do you think that is?
Well, the allure of the gray market goes beyond just the lack of regulation.
Okay.
It kind of taps into something quite fundamental, I think, about human psychology. The desire for quick wins.
Right.
And the willingness to take risks for potentially higher rewards.
Mm-hmm.
Some investors might still prefer the gray market, because they believe they can kind of outsmart the system.
Okay.
And make a faster profit by, buying low and selling high in that short window before the official listing.
So even with a regulated platform, there will always be those who kind of chase that thrill of the unknown.
Right.
And that potential for really big gains.
Exactly.
It's like a high stakes game of prediction.
It is, and let's not forget that the gray market can sometimes provide a glimpse into market sentiment, even if it's based on, speculation and hype.
Right.
The premium or discount that's attached to a share in the gray market can act as a crude indicator of how the stock might perform once it's officially listed.
So while risky, the gray market can offer some insights into how investors are perceiving a particular IPO.
Yeah.
It's like an unofficial barometer of market expectations.
Yes, but with a big caveat.
Okay.
Remember, the gray market is highly volatile and unpredictable. It's driven by rumors, insider information, and herd mentality. Prices can fluctuate wildly.
Wow.
And there's no guarantee that what you see in the gray market will actually reflect the stock's performance once it's on the exchange.
Right. So it's crucial for investors, especially those new to the market, to understand the risks involved and not get swept up in the frenzy of the gray market.
Exactly.
Now, coming back to SEBI,
okay,
what else can they do, apart from the when-listed platform, to protect investors and create a more level playing field in this pre-IPO space?
Well, one crucial step is to educate investors about the risks that are associated with the gray market. SEBI could launch public awareness campaigns, highlighting those dangers of unregulated trading and promoting the benefits of using the formal regulated platform.
Right.
They could also collaborate with investor associations and financial educators to kind of spread that message.
Education is key.
Absolutely.
An informed investor is much better equipped to make sound decisions and avoid those pitfalls.
Right. And another critical measure is to strengthen enforcement and surveillance. Okay. To crack down on those illegal gray market operators, SEBI could work with law enforcement agencies to, identify and prosecute individuals or entities that are engaged in fraudulent activities.
Right.
This sends a very clear message that manipulating the market won't be tolerated.
So it's kind of like a combination of education and enforcement.
Yes.
The carrot and stick approach.
Precisely, but it doesn't stop there.
Okay.
SEBI could also explore ways to make the formal IPO process more accessible and appealing to retail investors.
Okay. How so?
This might involve simplifying the application process, reducing the time it takes for shares to be allotted and listed, or even reserving a certain percentage of shares specifically for retail investors.
So by making the official channels more user-friendly and efficient, you could potentially reduce that incentive for investors to turn to the gray market.
Exactly. It's about offering a better alternative.
Right, right.
And one more thing.
Okay.
SEBI could work with stock exchanges to ensure greater transparency and information dissemination regarding upcoming IPOs.
Okay.
This could involve, providing more detailed company information, risk assessments, and analysis of market trends.
So equipping investors with more data and analysis would empower them to make more informed decisions based on facts.
Exactly.
Rather than relying on that speculation and rumors that you find in the gray market.
Right. The key takeaway here is that while the when-listed platform is a significant step, it's not a magic bullet. Right.
SEBI needs kind of like a multi-pronged approach that combines regulation, education, enforcement, and market reforms to effectively address the challenges of the gray market and ultimately protect investors.
This has been a really insightful discussion.
Oh, good.
You've provided our listeners, especially those preparing for the UPSC exams, with, I think, a very comprehensive understanding of the complexities of pre-IPO trade in the gray market and SEBI's role in all of this. Any final thoughts before we wrap up this deep dive?
I think the key takeaway for UPSC aspirants is that the financial world is constantly evolving.
Right.
New products and platforms are emerging all the time, and regulators like SEBI are constantly adapting to address these new challenges and protect investors.
Right.
So it's crucial to stay updated on those developments and be able to critically analyze their implications.
Absolutely.
Especially when, formulating those well-reasoned arguments for the essay paper, for sure. Well, thank you so much for joining us today on the Deep Dive. It's been a pleasure having you here.
It's been a pleasure being here.
And for our listeners out there, if you found this deep dive helpful, please don't forget to like this episode and subscribe to our channel for more insightful discussions on topics that really matter. And for those of you who are really keen on learning more about this specific topic, be sure to check out that Indian Express article that we mentioned. We'll include a link in the show notes. Until next time, keep diving deep and keep learning. All right, so welcome back to the Deep Dive. We've been navigating the often murky waters of pre-IPO trading in India.
It is murky.
It is a topic that's not just, relevant for investors, but also like a potential gold mine for those prepping for those UPSC exams.
Oh, absolutely.
Right.
Yeah. We've explored how the gray market operates, the allure and the risks it presents, and how SEBI, India's market regulator, is stepping up to bring more transparency and regulation to this space with the when-listed platform.
It's been quite a journey.
It has.
And as we wrap up this deep dive, I want to make sure our listeners, especially those UPSC aspirants, walk away with some key takeaways that they can apply not just to the exams, but also to their understanding of the financial world.
Absolutely. So let's recap the main points. We began by understanding the gray market, an unofficial, unregulated marketplace where shares of companies that have completed their IPOs but are yet to be officially listed or traded. This market thrives on speculation, the promise of those quick profits, and often operates in the shadows away from the oversight of regulators.
And we discussed how SEBI's when-listed platform is like a game changer in this context.
It is a big deal.
Right. By creating a regulated space for trading shares in that crucial window between allotment and listing. It offers investors a safer and more transparent alternative to the gray market.
It does. However, the gray market is unlikely to vanish overnight. The allure of those quick gains and the thrill of operating outside the traditional system will likely continue to attract some investors, even with a regulated platform in place.
Which is why it's so crucial for SEBI to adopt like a comprehensive approach.
It is.
That goes beyond just introducing a new platform. We discussed how educating investors about the risks of the gray market is like paramount.
Yes, education is key.
Alongside that, stricter enforcement and surveillance to curb illegal activities in the space are also essential.
Absolutely. And let's not forget about the importance of making the formal IPO process more accessible and efficient for retail investors, simplifying procedures, reducing waiting times, and perhaps even reserving a portion of shares specifically for retail investors could go a long way in reducing the appeal of that gray market.
So it's all about creating a system where investors feel empowered and confident, participating through the official channels.
Exactly. And to bring it back to our UPSC aspirants,
Yes.
this entire discussion is packed with potential exam material.
Yeah.
Questions could range from understanding the basic definition and mechanics of the gray market to analyzing the effectiveness of SEBI's regulatory measures,
Right.
or even discussing the ethical implications of participating in such unregulated markets.
It's not just about, knowing the facts.
No.
It's about analyzing the situation, understanding different perspectives,
Right.
and formulating well-reasoned argument.
Exactly, and that's what we aim to do here on the Deep Dive.
Right.
We equip you with the knowledge and those analytical tools to not just understand complex topics, but also form your own informed opinions.
So if you found this deep dive helpful,
Yeah.
don't forget to like this episode and subscribe to our channel for more insightful discussions
Yes.
on topics that really matter.
Absolutely.
And for those of you who are really keen on learning more about this specific topic, be sure to check out that Indian Express article that we mentioned.
That's right.
We'll include a link in the show notes. Until next time, keep diving deep and keep learning.